for Bank Nifty is just 500 points of cut. So almost more than 100 points recovery from the day's
approximately 200 points of recovery actually from actual day's lowest point coming in for Nifty Bank. But yes, but now the stock is actually, or rather the index is also seeing subdued moves. We still have 2 hours of trading session left, so once that is done, we will know where we are at this point in time. But let's talk about the stocks that are in focus. One of the stocks definitely has to be Happiest Minds, because they reported their earnings, and we are joined by the management of Happiest Mind to talk about the earnings. We're joined by Mr. Venkatraman Narayanan, who is the MD and CFO of the company, while we have Joseph Anantharaju, who is the Executive Vice Chairman of the company, joining us. A very good morning to, or rather, good afternoon to both of you gentlemen. Thank you so much for joining us on ET Now to highlight the earnings for the quarter gone by for your company primarily. But let's dwell in more about your earnings. And if you look at the company, it actually delivered 11% quarter, or rather constant currency growth in FY24. If you could tell us what sort of a target are you actually envisaging for FY25, given the fact that there has been acquisition, and also there is acquisition scale up as well. So what are you envisaging?
Coming to the next year, we have announced a couple of acquisitions. We continue to be on the lookout for more. We have a reasonably good pipeline as we speak. But the 2 acquisitions that we have will have a reasonable impact, and we have also planned for a decent organic growth. As in the past years, we are not splitting our outlook for the future basis organic and inorganic. And here, it's early days to give a guidance, because we have just about closed the acquisitions that we are talking about. One is still to close, which is Pure Software, which we are expecting end of May. But given all of those moving parts, we believe that we can do this, as an estimate, a growth of about 35 to 40% for the next year. So that's the starting point on revenues. And on margins, I would like to go slightly broader, which is 20 to 24%. And I would like to now bring in operating margin EBITDA interchangeably, because quite a bit of our money will get deployed into the acquisitions. That has to work. And when you take EBITDA, it has other income and the other components. So we'll have to balance that through the acquisitions that we get. But one thing I would like to clarify, Pure Software or Macmillan Learning, both acquisitions are cash accretive, growth accretive, synergistic, and they are very profitable companies. So we have not gone ahead and we are not doing something where we need to turn around the company and as such.
Right, Venkat. In fact, I appreciate that you aren't actually splitting the guidance, but the street is a bit worried that the bulk of the growth is only in organic. Any comments on that particular comment coming in, or the worry coming in from the street?
In a quarter, the street and the analysts will get to see the growth that is coming from Pure Software, because that's a separate entity and we'll be reporting separately. And there is a very good, healthy organic growth objective that we have taken for the current year. Just that we don't split it when we talk about, because some bit of business can happen because of the synergies that happen and how that gets attributed, and did not want to get in the split. And we have not done that in the past. If you look at it, last year we said 25%, didn't divide. In Q2 we didn't close an acquisition. We came back to the street and said, yes, we'll be doing 12% in terms of revenue. We're trying to stick to that. But as we progress during the year, the numbers will make themselves clear that we are not shying away. To reach that $1 billion target, we had to grow at about 25%. Now that is at 22%. The 22% is not all going to come from inorganic means. We will have to continuously invest and grow that organic muscle that we have so nicely put across the past few years.
All right, Joseph, now coming to you. A very good afternoon. This is Shrishti also joining in. My question is, what kind of a demand environment are you witnessing currently? Like, how has the client behavior changed?
Deal cycles out a little bit. And if you look at sectors, again, there's there's a little bit of difference between various sectors. Healthcare we still see as being, and it's reflected in our vertical number movements as well. Healthcare seems to be quite fine. Industrial manufacturing is still holding its own. High tech is being cautious. In edtech, you'll see K-12 being a little bit more open to investments, whereas higher ed is going through a tough time. So it's a little, and retail CPG, I think the CPG part is investing, whereas retail is being a little careful. So that's from a vertical perspective. On GenAI, what we are seeing is that customers across the board are really excited, and we're having multiple conversations. We have 14 customers where we've done, implementation of a few use cases, starting with POCs. And I think as we get into the second half of this year, our expectation is that we will start seeing more and more of the implementations taking place, where the ticket size of projects will be larger. So I think in a nutshell, it's about making sure that we focus on the areas that are more important to customers and will have a larger impact. And those will be around analytics, automation, GenAI, security, and things like that.
Right, Joseph, if you could talk to us about the client matrix, especially the new logos, the client mining. Also, if you could talk about the overall pipeline.
Okay, so looking at new logos for the pipeline, there was I think end of Q2 pipeline was really good. Q3 moderate a little bit, and we are back above Q2 levels now. So the pipeline is looking quite strong. I would say the focus would be more on conversion and getting things started off now. In terms of new logos, again, it was a strong quarter. We had 10 new logos that we were able to add during the quarter, continuing, the trend of having between 8 to 12 new logos right through the year. And I think given the customer base that we have, I'm quite happy with the number of new logos that we've signed. And, we will have to look at how to grow these. On the customer expansion, I think it's a very good point, and that's something that we've made a focal point of our strategy, because we have $61 billion customers, and each one of these should be a pretty, have a pretty good budget and IT spend. And in the current year, there's going to be a huge focus on seeing how we can cross-sell across our three business units, IMSS, digital, and generative AI, to increase the wallet share in our customers and to do more cross-selling. And I think the verticalization strategy that we've adopted and implemented, having industry groups that will take ownership for these accounts, is what will really, we feel, help us to bring this to fruition by bringing the COEs, the three business units, all of them together, and making sure that we have solid account expansion plans, and also bring the various players together to implement these plans.
All right. Also, Mr. Venkat, the levers for the margins, and what's the outlook on the headcount addition going ahead, if you could give us some sense over there?
We added about 251 people in terms of happiest minds year over year, crossed that barrier of 5,000. So that's a milestone for us. Looking into the year, we want to take that number between 6,500 to 7,000, which is, net headcount increase of close to 2,000 people next year, out of which we have an acquisition, the rest coming in from organic growth. So like I said, not shying away from organic or hiring for it. But the focus or the lever that we have in place is utilization. We are at about 75, 76 for the last year, and we are nicely perked up on that front as we exited the year. We had hired about 400 plus campus joiners and laterals. They were slowly coming into the workforce, available workforce. That's also happening. So that utilization uptake between 76 to 79 is an obvious lever. The growth numbers that we are looking is at the second lever. The third one, the acquired entities, bringing in the synergies that we talk about. There's a lot of talk about why it is synergistic before the acquisition. We need to execute on that in a very planned and calibrated manner to make sure that that also adds to the bottom line and the top line. So quite a few levers. The new one that I would add into this mix is the acquisition. And obviously, it cuts both ways. You can't go about shaking something the moment we start. We have said we've acquired, and Pure Software is a reasonably sized acquisition, so we have to take it in a very calibrated, planned approach to make sure that 1 plus 1 is surely 2.5 or more.
All right, then we leave it there. Thank you so much, gentlemen, for joining us on the show actually and talking about the earnings gone by for happiest minds, as well as if you can see the stock price right now, it is perched at around 831 or so, with an uptick of about 3%, and that most of the move has come over the last 15 minutes. The company is estimating a 35 to 40% growth in FY25, and margins they are estimating to be in the range of 20 to 24%, and the street seems to be liking that. But on that note, we slip into a break on this edition of Market Fatafat. Stay tuned. More on the other side. Don't go anywhere.